Yo, what's good, YouTube? It's your boy Osuke, and y'all already know how I'm rocking. If I promise something, I gotta deliver it. So here's the model that got me funded twice and the payout twice, part 2. Thank you guys all so much for all the support from the bottom of my heart. Like, I love to see it. 250 members already in the Discord. Let's get it. Only 5% are subscribed though, so like, comment, share, subscribe. Even if you want, you can dance for the video, you feel me? As long as you support it. So I appreciate all of you. Proof is all on my Twitter. I don't cap. I will never cap. Go to my Twitter. Check out the proof if you want. We'll be going over these trades. Let's get it, man. So guys, on the daily time frame on Euro USD, we can see that we have just taken out a yearly low. After we take out key liquidity points, what does this mean? It means that price will either retrace or reverse. So once we zoom in a bit more, we can see that we created a daily fair value gap when we displaced down in the yearly low. This daily fair value gap was an indication of me that we might want to continue to go down after tapping into it. But when we failed to continue to go downwards after tapping into it, I had to change up my bias because I saw that there was a daily fair value gap getting created to the upside. As you guys can see, I just annotated it on the chart. This daily fair value gap right here also held price up. So that was a clear indication for me that we were going to continue to go up. When we zoom into the 4 hour, you can clearly see that after price took out this yearly low, we left a swing low right here and then we swept it one more time. If you guys know how I like to trade, you guys already know I use standard deviation projections a lot. I truly love them. As you guys can see, this latest manipulation lag, we take our Fibonacci tool from the bottom to the top, we project it upwards, and as you can see, -2 and -2.5 standard deviations is lining up beautifully with the retracement. And as you guys can see, we retrace into the 4 hour order block and then we respect it, leaving another fair value gap right here. And then we also respect that fair value gap. So this is a clear indication for me that the order flow is now bullish, so I can continue to look for longs. So on the hourly time frame, we can see that the 4 hour order block is marked right here still, but I've also marked out the hourly balanced price range. I'm gonna drop a gem, guys, so listen closely. It's just my personal experience, and I'm sure it's true because otherwise I wouldn't be printing like this. So the PD arrays that are created with time frames overlapping are the strongest one. Like for example, right here, the 4 hour order block also contains a hourly balanced price range. It's not even just a normal fair value gap right here, but it's a balanced price range also. When I was editing the video, I realized I didn't mention this, but it's quite important to mention. So this is the daily fair value gap that we used as support, push off of. Okay, so when we zoom into the hourly, we see that we also swept this liquidity point right here. So this order block becomes even stronger because we swept all this liquidity and tapped into the daily fair value gap while we swept this liquidity, trading this 4 hour order block. I just had to drop this in the video because I can't let this go. This is a gem. So peace. That just indicated to me that price would like to hold this level. And as you can see, it held this level and continued to go up. We respect this order block right here. And then we make another hourly fair value gap up. I know you guys just want to see the entries and stuff. But what we just did before this was creating a narrative. And that is one of the most, like, not even one of the most important things. That is the most important thing that you should do. So this stuff right here, this is the easiest part. If you can't do the stuff before, then you just rewatch the beginning and apply it on your own charts because that is what you need to learn. The entry patterns are easy. The entries are not even that important. The most important thing is your invalidation level and your take profits. It doesn't matter where you entry as long as you make bread, you feel me? So on the 15-minute chart on Euro USD, we can see that we have just tapped into the hourly fair value gap that I've just spoken about. We tap in it. And what happens, we react on this level and we go up. I will zoom in a bit, just relax. But remember what I said in the previous video. Accumulation, and then we manipulate below midnight open, below 3-day open. Like, it's just like clockwork. It always, like, it happens so much. I don't know how people cannot see this. So when we're bullish, what do we want to see? We want to see a manipulation under the midnight open, which we have gotten here. All right, boys, we finally got to your favorite part. Entry, let's go, the entry. The easiest part. So I want you to pause the video and I want you to mark out the entry pattern you see in this piece of price action right here. If you paused it, you're a legend. If you didn't, sucks to suck. So what do we see here? We have a low, high, lower low, higher high, leaving a fair value gap and a breaker. So if we put our limit on the fair value gap, let's see how price played out. Beautiful, just beautiful. As I said in the previous video, take profits at session liquidity levels or like liquidity levels in general. So I took my take profits at the Asia high and the previous week high. And guys, look how beautiful the standard deviation stuff is. So we take it from the manipulation lag and we project it upwards. It flew through -2 to -2.5 standard deviation. What does this mean? This means that price is likely going to -3.5 to -4 standard deviations. And look how price tapped into it and then it reacted off it. And now we're going into the dumb smart money type beat. Alright guys, so as you guys know, there's a lot of people going around saying, yeah, smart money is even smart money, it's dumb money. And this is one of the few reasons. So the narrative is bullish, right? And then the pattern traders that are just seeing this unicorn pattern would be shorting this because we just took out a liquidity point. But that's not how the markets work. We're in a bullish order flow, so why are we trading counter trend outside of the kill zone? Just a retracement basically. So a lot of people that have shorted this unicorn probably have their stop loss on the London highs, aiming for the London lows. So let me just go back to the hourly time frame so we can get a better picture of it. So we swept this liquidity point right here, right? And then the unicorn formed and people are shorting. But we are waiting for the long. We see this beautiful fair value gap created in the London session. A New York session manipulates. Again, accumulation, manipulation, distribution. So New York session manipulates into that, also known as the Judas swing. Let's see what happens. So pause the video, mark out the unicorn. If you don't, it's up to you. If you want to improve, you mark it out. All right, whoever marked it out, legend, and whoever didn't, hey, your choice. So guys, you guys already know how it works. High, lower, low, higher, high, leaving a fair value gap and a breaker. So this is the manipulation lag, taking out this low. If we project it upwards, -2 to -2.5 standard deviations is aligning with this liquidity pool right here. So that's an extra confluence we can use while taking profits. And guys, oh, when I saw this trade, I knew that so many people probably shorted this. So I was so confident it's going to go up. Because truly, I believe there's an algorithm. We can go into a debate. We can talk about it, blah, blah, blah. I don't want to talk about it in this video, but I believe there's an algorithm. And this algorithm is just putting this right here. So everyone shorts. And then it's just going to take out their shorts. It's just the most logical. Like the market runs on liquidity. It's just crazy. So let's see how price play it out. Beautiful. I'm telling you, it's beautiful. And guys, I'm gonna drop my sauce. I'm feeling good right now. So there's many ways I enter, and this is one of them. When I see price doing the market structure shift, when I see price retrace into the fair value gap or the breaker, and then when I see price break another leg. After price broke this leg, this was also a valid entry in my opinion. And then when price went up, where's our take profit levels? Liquidity points as per usual. And guys, I've been there. I still do it sometimes. I micromanage the position. So I'm dropping a gem right now. If the order flow is not getting disrespected properly, you don't need to worry too much. Because it might just be a liquidity sweep to continue the order flow towards your take profit. Because when I was in this trade and I saw price going like this, I was like, damn, what's happening? Then I saw the price did not invalidate my long, so there's nothing to worry about. And what happened? It went to my take profit. So guys, please, if you're ever stressing out in the lower time frames, looking like a crackhead, like, oh my God, what's happening? No, it's going to my stop loss. Relax, it's probably just sweeping liquidity to go back up. Unless you have a wrong bias, then good luck, bro. Then you're gonna get stopped. But that's what really helps me. So guys, as I said, just zoom out and chill out and look at this. Look how beautiful it's moving upwards. Are we disrespecting anything? No. So why are we stressing? And I know many YouTube videos aren't about managing positions, but this is truly a gem. When you enter on the 5-minute time frame and the 15-minute is not invalidating your idea, then why are you stressing? Like we see the price reacts right here, goes down a bit, but it does not invalidate our trade. Because for it to invalidate our trade, it should go under this low. So guys, I wish someone told me this in the beginning of my journey. When price is moving up perfectly fine on the 15-minute, don't stress out on the 5-minute, bro. Don't stress. Just chill, practice your patience, watch it hit your TP, make it a habit, and print. That's how you improve. Like everyone is just making the same mistake over and over and over and over and over again. So buy a journal, buy a pen. What I did is I bought an expensive pen, expensive journal. So I need to journal in it because I'm not spending that much for it to not get used. Especially not if it's for the betterment of myself. So guys, if you're listening to this and you still don't have a journal which you're journaling on, pen and paper, not Word, not Notion, pen and paper. You gotta sit down and be with your own thoughts. You're not gonna improve if you don't know yourself. You need to know yourself before you need to improve. So that's another gem I'm dropping. Like, I know people don't want to hear it, but if you stick to the end, then you deserve to hear this. Bro, so please do yourself a favor. Go right now. Go. When this video ends, I want you to go and buy a journal and pen. And I want you, when it comes, I want you to write in it. And when you're funded and profitable, I want you to send me a picture saying, oh no, look at this. You told me to buy a journal and look what happened now. Because bro, when I bought a journal, the improvement was insane. So thank you guys for watching until the end. I truly appreciate it. And I hope that you guys got the knowledge that I was trying to transfer. Also guys, come join the Discord if you're a crazy market milker. There's a beautiful community. There's a lot of funded traders helping out newer members and stuff. We're posting our analysis in there, even me. And guys, please drop a like, sub, comment, share, follow me on Twitter. Join the Discord, obviously. And yeah, that's probably it. Let's get it, man. Let's get it, bro. Let's milk the markets even more. Let's get it. Peace out, boys.